Omid, Sandvik is your focus idea. And when we look at the share price, it has a reasonable correlation to the copper price overall. And of course, the BI mining team are looking at, I guess, a few challenges to that price as miners ramp up production in the second half of this year and into next year. So how can Sandvik's mining and rock unit buck that trend and take advantage of the production expansion?
So the supply ramp-up is highly positive for aftermarket sales of the unit, which we think make up about 55% in a pure sense. And on the new equipment side, most of the large diversified miners plan to significantly raise their capex budgets next year. This suggests that the positive momentum in revisions for the unit's organic order growth, can't be ruled out. Overall, these miners see their capex budgets increase by about 12% next year. That's on top of 11% growth expected this year, and this all bodes well for Sandvik's new equipment offering and could drive consensus to upgrade the segment's top line growth. Our estimates, our scenarios, it's 3 to 6% above that of consensus for this year and next year. And if we add on our margin expectations, where we see 30 to 40 bips upside potential to consensus estimates for this year and next year, then we're at 4 to 8%. We sit 4 to 8% higher at the adjusted operating income level. Now, what's really interesting is that the growth in miners' capital budgets is mainly driven by expansionary investments in gold, but also electrification commodities, including copper, lithium, nickel, and cobalt. And that's alongside measures to improve mine site productivity and also projects to decarbonize operations. It all bodes very well for the type of equipment that Sandvik's mining unit supplies to the operations. But what's also really interesting is that the current investment plans are focused mainly towards brownfield expansion, and these tend to be less bureaucratic and quicker to execute.
Great. And you mentioned decarbonization. So when we look beyond the next couple of years, what are the key structural drivers within mining that will drive Sandvik's growth? And certainly in terms of the energy transition, how does that factor into these trends?
Well, this is really interesting because, we have a structural shift to underground mining, and declining ore grades requiring more rock to be moved for a ton of final commodity, backs long-term demand growth for the unit. On the new equipment side, but also parts. The transition to battery electric vehicles suggests a significant uplift for the total addressable market. And, separately, Sandvik's direct distribution model drives a higher aftermarket capture versus the likes of Caterpillar and Komatsu. Now, the unit's exposure to faster growing market segments, these are underground mines, mobile machinery, and non-ferrous metals, means that the unit has the potential to boost organic revenue growth 100 to 200 bips above the 2% average mining production growth expected over a cycle. With another 2% of structural gains from core mining value chain expansion and, say 1% from an electrification and digital push, we believe that the segment could deliver 6 to 7% average revenue growth over a cycle. That's very respectable.
Fantastic. And then we've got Q3 results just around the corner. What are you expecting from that set of results? And maybe what are some of the catalysts we should be looking out for?
So we think results will highlight resilient strength in orders, consensus beating execution. At the end of November, there's a capital markets day that could highlight lower than historical earnings volatility, driven by the strength in mining, but also incremental savings. Over the course of November and December this year, we'll have major miners. We could see major miners raising their capex budgets at their own investor days. And early next year in January, we have full year results. And this could show 100 bips structural growth from battery electric vehicle orders. We think that new equipment orders in this product segment could reach 15 to 20% in the load and haul category. And that will be up from 10 to 15% last year.
Fantastic. Omid, thanks very much for your time. We'll keep an eye on that.
My pleasure.